So, whose silver bullet strategy is the best? ICT himself, Casper SMC, TT Trades, or YTG? So, the thing about ICT is that he always leaves things unexplained, and you can't be profitable without making some tweaks to ICT strategies. And same is the case with the silver bullet strategy. If you use it the way he explains it, you can't be profitable. I can bet on that. You have to make some tweaks to a silver bullet strategy in order to make it profitable. Now, as far as Casper SMC, TT Trades, and some other big names are concerned, I have backtested their strategies. And the thing about their strategy is that they have a win rate of almost 60%. They just find a fair value gap and they get an entry. And they usually use a very wide stop loss in silver bullet trades. And some of the traders can't afford such a wide stop loss. So the only solution is YTG, your trading guru. And I am going to give you a strategy with 90% win rate. And it can be used for Forex, indices, and crypto. You can always backtest it and give me the feedback in comments, because your feedback will help the newbies to know if this strategy really works. So first, we will discuss the silver bullet strategy in complete detail, and then I will show you a backtesting example which will clear all your confusion. This might be my last video about the silver bullet strategy, and I will cover it in detail. So better watch the whole lecture to get the concept, okay? So the first question that will come to your mind is, what is ICT silver bullet strategy? So ICT silver bullet strategy is a time-based strategy, okay? Like, you have to trade within a certain window in the silver bullet strategy, and that window is 3 to 4 a.m. New York time and 10 to 11 a.m. New York time. Okay, let me correct it. 10 to 11 a.m. New York time. You can't trade in any other timings. There is one other timing, which is the PM session, but I haven't find it very profitable, so I don't use the PM session. Okay, I only use the 3 to 4 a.m. and 10 to 11 a.m. window. Okay, and this time that I have shown you is the New York time. Okay, you have to change your timings to the New York UTC. From here you should change the time zone to UTC New York. So this is the definition. It is a time-based strategy, and you have to trade within a certain window, that is 3 to 4 a.m. and 10 to 11 a.m. So you have to draw these lines, these vertical lines, 3 to 4 a.m. and also I will draw this 10 a.m. 10 to 11 a.m. okay, this is your 11 a.m. So you just have to wait for these two windows to trade the silver bullet strategy. So it's a good strategy because you won't have to wait all day long for your trades. You just have to wait for this small window. Now there will be some more questions in your mind, like, should I get an entry during this window? So the answer is yes, you have to enter into a trade during this window. And the next question will be, should I take profit within this window, 3 to 4 and 10 to 11 a.m.? The answer is no. You can wait for your targets. You shouldn't take profits during this window. You just have to enter during this window, and for the profits you have to wait for the target. Now the next question will be, what should be my target? So if you are trading Forex like Euro or GBP or any other currency like New Zealand dollar, Australian dollar, then your target should be 15 pips. I will explain what is pips. So for Forex, your target should be 15 pips. And then if you are trading indices, then your target should be 10 handles. Okay, 10 handles should be your target for indices. Now what is 15 pips? So if you are trading this in Forex, you can use this price range to find the pips. Let's suppose you got an entry around here at this point, 1.26619. Then you should draw this line to the top. You can see if you are into your long, so you can see this is 14.9. You should set that on 15. So this is the 15 pips. Like if you long here, this should be your target. The stop loss will be below the lows. I will explain that later on, but the target should be 15 pips. And in indices, the target should be 10 handles. I will come back to that later on. So, so this is the intro. This is a time-based model. This is the timing 3 to 4, 10 to 11, and the target is usually 15 pips for Forex, 10 handles for indices, and you have to enter during this window, but for the targets you can wait even after this window. Now the next question will be, how would I enter into trades? So to enter into your trades, you have to wait for the fair value gaps. I will explain it. What is the fair value gap? It is also called FVG. So to enter into your trades, you have to wait for the fair value gaps. Now let's suppose the price has entered into this window and it's going down like this. Let me color it red. So the price has entered here and the candles are going down. I use the 5-minute chart, as you can see here. So each candle is of the 5-minute candle. Okay, let's suppose the price is going down like this. Let me draw one more candle, and then suddenly the price reverses like this. The price starts going up. Now you can see that between the bottom of this candle and the top of this candle, okay, the top of this candle and the bottom of this candle, there is a gap. You can see this gap. I will color it orange. You can see at the bottom of this and from the top of this candle there is this gap. This is called the fair value gap. This is called FVG, or the fair value gap. So to trade the silver bullet, you have to wait for these fair value gaps. But there is one more thing to this strategy. You just can't enter into every other fair value gap. Okay, like something like this can also happen, that you will get a fair value gap to the downside, and then you will get a fair value gap to the upside too. So then there will be confusion for you of whether to enter into shorts or whether you should enter into longs. Let me draw this again. This can also happen, like you can see there is a fair value gap to the downside and there is a fair value gap to the upside. Now should you enter into your shorts from this fair value gap, or should you enter into longs from this fair value gap? So for that I use another smart money concept, which is the SMT divergences, which is the SMT divergences, and this makes my strategy different from the rest of them. Okay, nobody uses the SMT divergences in the silver bullet trade, but I will show you in the examples that the SMT divergences are important. Now what is SMT divergence? So in trading you have some correlated pairs. What I mean by correlated pair is that if the price of one pair goes up, the other one also goes up, like SMT pair or correlated pair. Okay, you have some pairs which are correlated. These are called SMT pairs, and I have already explained it, but again, some of the examples are euro and the GBP. If euro goes up, the GBP also goes up. Then in crypto there is Bitcoin and Ethereum. Okay, in indices there is Nasdaq and SPX. Then there is Bank Nifty and Nifty. So there are of course some others like Australian dollar, New Zealand dollar. Okay, there are some pairs which are inversely related, like euro and DXY. If the price of euro goes up, the DXY goes down. So there are these pairs. Okay, SMT pairs. Now how can you trade using the SMT divergence? So let's suppose we have euro here This is the example of the euro. Okay, and below this line, this is the GBP. This is GBP. Now, as I said, the price of one pair goes up, the other one also goes up. Okay, like this. If this is the euro is going up, so the GBP will also go up like this. But you can see that both are going up, but here you can see that this was the low on the euro, so euro didn't sweep this low. And if you look at the GBP swept this low. So this is called SMT divergence. Now this divergence has formed at the bottom, so the divergences that forms at the bottom are bullish. Now how is this a divergence? You can see that it didn't sweep this low. Okay, the price stayed above. Now it swept this low, so we got a sign like this at the bottom. Okay, you can see this and this, so we got a sign like this at the bottom. So when you get these divergences at the bottom, these are usually bullish. Now you can get some bearish divergences. Let me draw it again. You can see that the price is going up and then suddenly it starts going down. Now same will happen with the GBP. Okay, it's also going up, but here you can see that euro swept the high. Okay, and the GBP didn't, so we got a divergence, and this divergence is at the top, so this is a bearish divergence. We get a sign like this. You can see we got a sign like this, and this is at the top, so this is a bearish divergence, and after the bearish divergence the price starts going down. So in the silver bullet window you have to look for these divergences. Okay, if there is a bearish divergence and then you get a fair value gap, you will enter into your shorts. Now if there is a bullish divergence and then you get a fair value gap, then you should enter into your longs. Now there will be some questions in your mind. What if there is both bullish and bearish divergences? So I will clear all these confusions or all these questions from this backtesting example. Okay, so I will remove all these drawings and I will show you this backtesting example. This is from the 22nd of August, and this is the 5-minute chart. Now this is the silver bullet window, the 10 to 11 a.m. Okay, so I will open the euro chart too. You can see that both the prices are going down. I will forward it. Each candle is of the 5-minute. Now the price has entered into this window. So the first step for us is not the fair value gap. The first step is always finding the SMT divergences. So here you can see that you got this fair value gap. Okay, you got this fair value gap. As I said, in silver bullet you have to find fair value gaps, but as I said, now the first step is SMT divergence. So there is no divergence yet, so you cannot enter into this fair value gap. First you have to look for a divergence. So let's see if we get any kind of divergence here. You can see that we have got no bearish divergence because both of them swept this high. Okay, both this GBP and euro both swept the high, so there is no bearish divergence. So still we're gonna wait for any divergence. Now this is the low of the GBP. Okay, and this is the low of the euro. You can see that euro swept this low. So let me forward it. Now you can see that we got this divergence. Okay, there are two things now. You can either wait for the 5-minute entry or you can enter with 1-minute time frame. Usually what I do is when the divergence is clear like this, I enter on the 1 minute or 3 minute. When the divergence is not much clearer, then I wait for the 5 minute fair value gap. So in this trade I entered in 1 minute, but that's a bit risky, so we will wait for the 5 minute fair value gap. You can see that we got this fair value gap, okay, this one, and also one fair value gap is here, the gap between the top of this candle and the bottom of this candle. So this is also a fair value gap. Let's see if the gap gets filled. So you can see that the gap got filled, and this is 11 a.m. we are still in this window, so this will be your entry point. Okay, now your stop loss will be below these swing lows. You can either put below this swing low or this one. Okay, and as I said, your target will be 15 pips. So let me draw this, 15 pips. Okay, now you will have a question whether to enter into this one or this one. It all depends on your risk to reward ratio. If the stop loss in this one is tight, you can enter into this one. If the stop loss in this one is tight, you can enter into this one. Now let's see if the price goes up. Now I will play it. You can see that it pumped to that 15 pips, okay, and then it started going down. So this is how you can trade your silver bullet trades, okay. Now I will give you an example from indices, which is S&P 500 and Nasdaq 100, and also I will explain what is the 10 handle targets. So you can see that the price is about to enter into this silver bullet window, the 10 to 11 a.m. window. Okay, now as I already said, the first step is finding any divergence. So let's see if we get any divergence. The price is going down. You can see that this was the low, okay, and this was the low on the Nasdaq. So this low isn't swept, and this low got swept. Now what's the next step? The next step is finding any fair value gap to the upside. So let's see if we get any fair value gap to the upside. Still there is no fair value gap. Now you can see that there is fair value gap on this one and fair value gap here. So now the question is, which one is to enter? You can also enter in this one, okay, but here your stop loss will be around here. So this is a wider stop loss, and for 10 handles you can see that this is the price is at 43.51 and your target will be 43.61. This is the 10 handles, but if your bias is bullish, you can set higher targets. Okay, you can see that the target is smaller than the stop loss, so there is big risk in that one. Now if you enter into this one, this will be your entry point and your stop loss will be here. So in this one the stop loss is comparatively tighter, so I will prefer an entry here. And in this case the handles are a bit different, like if you enter around 1420, you can target here 40 handles. Okay, you should target 40 handles in the case of an S100. So 1240, and you will set the target of 1460. Okay, the target will be here. So let's see if we get an entry. So we got entries in both these cases. Now this is the fair value gap, and you can use the 0.5 fib level for an entry. Like you should set these entry points at the 0.5 fib level, so your entry point will be around here. And in this case 0.5 fib level is around here. This will be your entry point. Okay, so let's see what happened after the entry. You can see that it started pumping and both reached its targets. Okay, so this target looks small, but it gives a good profit. Okay, And as I said, if your bias is bullish, like if you think that this asset has bottomed out, you can set big targets for yourself. As in this case, I didn't take profits because I knew that it will go up as the price was bullish. So you can see it went up from this point. Again, it came down here, but it went up and gave us good profits. So this is how you can enter into your silver bullet trades. You have to be very careful. The first step will always be the SMT divergences, and then the next step will be the fair value gaps. Okay, and the entry depends on which pair has a good risk to reward ratio. So if you have any questions, you can ask me, but I hope it's clear now. Thank you guys.